Knuckman joins us now for the weekly options alert in our final trade of the day. So the market action is starting to point to what could be a January effect where we see some updates here.
Positive. Merry New Year cheer. So if you look at the first 5 days of January as a barometer, the January effect, we're positive, obviously. We've had a nice healthy bounce. And if you look in history over the last 43 years, 83% of the time that's meant that the year has been positive with the average gain of 14%. So as I always say, remain optimistic.
And you do remain optimistic, Alan. We know all about you. Let's take a look at that trades that we're tracking with you, Exelon.
Yeah, Exelon is a January 44 call. The theme of all these options and the options trades are having staying power as opposed to being stopped out. If you're trading a stock and you had the markets move the way we did at the end of December, an option allows you to ride through the ups and downs. So Exelon held that $44 level, that support level, and it's yesterday hit the highest that we've seen since the December 24 drop, where it was at $46.
Then there's Ambarella. Now this is a big tech supplier, including allegedly to Apple.
Right, and it dropped from 43 down to 33 on that crisis concern there. So we're at 37 right now, so we're near that halfway point of 38. We've got the $35 call, so it's in the money with a week and a half of time.
And also on your list, Canadian Solar.
Canadian Solar is doing pretty well. It's bounced back. It's been a sharp rally here. It rallied from $14 up to $17. An example where if you had the stock, you probably wouldn't have taken that pain. We're in good shape with that option. If you can take out that $18 double top, there's a lot more upside. We've got the $14 call for January once again.
And the big reveal for this week, the WPI trade trigger. You have AMD on your list.
Right. We're looking at a stock that we had played before. Remember, we did this in August.
I think you made some money on this one.
Yeah, we had a 50% profit on the first half and 100% profit on the second half. So this is a momentum mover when it gets going. So the smart money is piling into this stock. It's been stuck between 16 and 22 since October. Now, we're looking at it, a breakout of that range. Now, it didn't go down like all the other stocks. It's just been trading sideways. So that's a positive as well. This is a stock that's up 60-some% in the last year, even with this market drop. So the $17 call for February, more than 35 days of time. It's in the money, looking for it to hold that support level and push above 22 one more time.
Now, your trading floor takeaways start with the dollar done.
Oh, the dollar is done. So we need to stop talking about rising interest rates. Interest rates are actually falling. The 10-year note has gone from 3.25% down to 2.5% in a number of months. So rates are falling, not rising.
I think we got the picture on that one. Number 2 on your list.
Under 21. The VIX has come back down. We're around this $20 pivot that I've talked about time and time again. You had the December 26 lows in stocks. The VIX did jump up to 36, so that's 45% ago, but it didn't get anywhere near close to the February highs in volatility. So again, that's a positive signal.
And then finally, double digits.
Double digits. You gotta like where we stand right now. S&P, Dow, and the NASDAQ are all about 10% off those end of December lows in just a few days. So 10%, double digits, that's pretty healthy bounce to begin the new year.
And you are off to a winning year. Thanks a lot, Alan.
Thank you.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.